It's always tricky to predict the future, but 2022 was a year that truly confounded expectations. In January, a value rotation left technology stocks hurting, and as the months wore on, that pain has persisted. In February, war in Ukraine caught Western governments off guard, and though Vladimir Putin's special operation has in no way achieved what it set out to, the long-term ramifications for inflation, energy, supply chains and European security will be felt for years to come. In the UK, the Bank of England has struggled to put a lid on inflation, and amid a brief but dramatic collapse of economic orthodoxy in Westminster, many families now face the harshest winter in living memory. There's now a big question hanging over the whole situation. Should the bank continue to raise interest rates, and if it does, will the move cripple the economy? Here's Morningstar's market strategist Michael Field on that very question.
So I think that cripple is obviously a pretty strong word, and it's tough to predict if that's actually going to be what kind of stalls the economy, but it could certainly do a lot of damage. I think there's kind of three aspects of it. If we look from a householder perspective, obviously rising interest rates mean higher mortgage rates being paid. I saw an article this morning to say that it actually has fallen a tiny bit in the UK, but you're still talking for 5-year money. So to borrow for 5 years, you're still talking 6% an interest rate per annum. And then you compare that, that's basically doubled in the last number of months. So for any household, that's definitely going to bite. And I think the next level up then is kind of small business owners. If you have loans, mortgages on your property, etc., trying to fund those rates every month is going to keep increasing for a while, and is really going to put those businesses under pressure, particularly the businesses that don't really have high operating margins to begin with, the ones that are making, ticking by and paying the salaries of the mom and pop who actually run the shop in the first place. And then if we look again at another level up at kind of bigger businesses, obviously rising interest rates mean higher borrowing costs, less likelihood that those businesses are going to expand and go into a growth phase for the next few years. If anything, they're going to pull back, which again could mean job losses, which then feeds back into that loop of struggling households.
At the end of 2021, the spectre of dramatic inflation arguably just wasn't being taken seriously enough. This time last year, I spoke to a fund manager who was confident inflation would begin to fall towards the end of 2022 after a brief spike. But by August this year, it was clear the problem wasn't disappearing, and various estimates put inflation higher and higher and higher, well into 2024. UK policymakers now wonder whether they will achieve deflation at the same pace as seen in the US, but core inflation in the UK and Europe is still the problem child of macroeconomics. That's going to have to change, Field says.
It would be nice to see inflation rates actually falling in Europe in line with what we're seeing in the US, but the fact of the matter at the moment is that inflation rates are still rising both in the UK and in the Eurozone, and they're both hovering around that kind of 10% mark at the moment, which is huge. So the fact that momentum is behind them at the moment means it's unlikely that they're going to fall possibly in the next quarter or so. Underpinning that again is the fact that if you look at core inflation, which is where we strip out energy and food costs, which oscillate a bit more, they're a bit more volatile, we're still running base inflation rates at like 5 or 6% between the UK and the Eurozone. So even stripping out the volatile factors, we still got a pretty punchy inflation number, which has to come down if we're going to see, reduced prices over the next number of months. So I think just trying to get that down is going to be very difficult. And in the Eurozone in particular, you have the fact that in terms of energy and energy requirements, we not only have this winter to get through, but the Ukraine war doesn't seem like it's ending anytime soon. So possibly we're going to have to go through this whole process again next winter with energy prices still quite high as we deplete our kind of reserves. So I think it would be great to see inflation come down, but I think that seems quite optimistic at this point.
Finally, it's worth asking about the likelihood of more left field events. After the shock and astronomical financial cost of the COVID-19 pandemic, conflict in Ukraine has once more shown our vulnerability to external forces. Perhaps that means we should be prepared for further dislocation in 2023. The only problem is trying to discern what might actually happen.
Well, you mentioned the unpredictability of the event in the first place being the Ukraine war. So I think at this point to say that there could be something is easy to say, but pinpointing exactly what it could be and the damage that it could do is probably the hard part. But I think what's interesting is if you look over the last number of years, we've had one of these kind of black swan events, one of these events coming out of left field, pretty much every single year or every second year since. So we had the US-China trade war in 2018, which was pretty damaging at the time. 2020, we had the pandemic. And then in 2022, we had the Ukraine war come out. And before that's even ended, while that's still continuing, you still have these kind of underlying threats around China and Taiwan, and possibly the development of another pandemic with, monkeypox and other such viruses prevalent in parts of the world. So again, I'd like to say that, we've had our kind of quota of these black swan events for a while, but the most likely outcome is something's going to hit us again in the next few years. But what's difficult is actually quantifying how damaging that could be, I think.
Overall, it's been a dramatic, challenging and at times exhausting year. At the end, it's clear we now live in a new economic era where old paradigms have fed through into new worries. 2022 was a bumpy ride. 2023 could be quite the roller coaster.